Hello, friends. Hello, friends. This is Macromia once again. Let's go through the macro events that was flowing during the day. First of all, this week is dominated by the central banks because, banking turmoil and many central banks in developed markets are rising rates, taking interest rate decisions. So basically, the central banks are trying to see through the stress by, talking up the market and staying the course of rising rates. So, says a look at the day ahead in US and global markets. The major central banks are all seem determined to tighten the monetary screw another notch. If these monetary policymakers felt higher interest rates were the main cause of this month's banking shock, or that the fallout from it was truly systematic and economically damaging, the decision to push ahead with hikes would seem perverse. The Federal Reserve interest rate rise signals confidence, says Reuters. Probably they want to convey the confidence or they're taking the confidence. We do not know because central banks have been wrong many times in the past. They could go wrong with this. They could, overdo the interest rate decision. But the Fed decision to rise rates is basically about the confidence they have on the market. The Swiss National Bank raised off percentage point, and they said they may do it again. It cannot be ruled out that additional rises in S&P policy rate will be necessary to ensure price stability over medium term. They raised the rate just few days after, bailing out one of their major bank, Credit Suisse, around failing. So it seems that central banks are hell-bent on raising rates and fighting inflation. However, the rate strategists are talking about the central banks reaching their end of rate rising cycles. ING rate strategies say central banks are still raising rates, but they're coming closer to the end. Norway central, but however, all those developed mock central banks seems to be in unison to stop the narrative that central banks are done with raising rates and they may start reducing the rates at any time. Even the Norway central bank says hikes must go on to bring down the inflation. This is what they're saying. So what's going on in macro front in India? We have been listening from the policymakers to politicians talking about how resilient Indian economy is, etc. It may be true on overall scenario, but are we okay during this period of bank turmoil and recession oncoming recession? So yeah, there it is. Although the politicians are talking about strength of India, they're actually worried. They actually seem worried, and they're asking banks about what's going on with their books. So the Finance Ministry of India has asked banks to submit data on their held to maturity bond portfolio, and more importantly, the mark to market losses. Because the SV Bank in US was holding all risk-free US Treasury assets, but suddenly because their assets lost value due to rising interest rates, the depositors caught cold feet and they withdrew the funds. That resulted in the bank run, which ultimately ended in the demise of SVB. So Indian banks also have a lot of, especially PSU banks, have a lot of government bonds, which has risen. The yield has risen. That means the bond value has fallen. So they are all holding mark-to-market losses. The government wants to know how deep they are into losses, because these banks will not report the losses till they report their quarterly numbers, and then it could be too late. So the government is obviously worried. They're asking for details. So what do the macro analysts are talking about India? The capital economics says, while Indian banks have cleaned up their balance sheets in the past years, some vulnerabilities lurk. A high ratio of non-performing loans. Oh yeah, India is very famous for bad loans in the banking sector, and low regulatory capital are causes for concern. Basically, the capital ratio is low. The loss absorption capacity, in case if there's going to be NPA piling up, and the loss absorption capacity of Indian banks is lowest among EMs. So that is a concern. So that is probably why FIIs have been pulling out funds. They've been net sellers the last couple of weeks. In the equity markets, the last 30 days, they were net buyers, but they are net sellers to the tune of 6,000 crores in the last 2 weeks. And in index futures, they have been sellers all along. They've been selling for the whole time. For the last 30 days, they were sellers. The last 2 weeks, they're net sellers. So they've been selling probably because of the concern that, banking turmoil may result in contagion, and that could affect Indian banks. So, however, there is a general macro narrative that the emerging markets are better than developed markets at the moment because of better growth prospects. The developed markets have lower growth, and the banks are in trouble because of these bank runs. While India and other EM, the growth prospect is generally better. So they are of the view that EMs are better. However, the risk in case if dollar goes up further and currency falls, the risk is higher in India, because if rupee takes another leg down, the Reserve Bank may have to increase rates substantially. That will result in damaging those growth prospects or the growth potential of the country. So, how are the markets doing in India? Let's have a look. Let me share the screen of trading view here. So this is Nifty. The Nifty went up in the morning, but then again, the last couple of hours, it gave up all the gains and ended almost where it started. But however, because of this general market narrative that emerging markets are better, I hope the markets are going to be coiling around this area. Probably it's going to pull back towards 17,800, and it could potentially face a resistance in 17,500. Could break, probably could go to 17,800. But if it breaks below 16,800, there could be further downward potential. Somehow I feel, because this market is in a slight uptrend and it has gone down, it has formed a double top, double bottom here. It's likely to be a slowly grinding up towards 17,500 and then towards 17,800. How is it going to open tomorrow is all depends on how markets behave overnight in years, but generally the trend seems to be a slow up move. And thanks for watching. Let's say goodbye until next time. Thank you. Bye.